in June, so that is good. Also, 11% of them were from foreign sources, which everybody thinks is China. So it does speak to the recovery in China. Speaking of China, we'll take a look at the FXI here and the EEM in a minute, but they had a big night. The CSI 300 popped 1.4%. What I found more interesting is the
What's that?
advance to declines. It was 3 to 1, and
Wow.
then yeah, then we had Shenzhen, which is a higher beta index, 5 to 1 net positive breath, and it went up 2.7%. So there you go. Now, some people are saying that that is a little bit, they've gone too far too fast, perhaps, but look at it this way, though. So China's economy is roughly 20% of the world's total, but their stock market capitalization is only 11%. So some people think that that means they can go a bit further. Moving over to Europe, Mike, French finance minister said the country's GDP is going to contract 11% in 2020. So things are obviously stronger in China than they are in Europe. Regarding the virus, just a little while ago, about an hour ago, the head of the World Health Organization came out and said that the pandemic is still accelerating. I think we could have probably told him that. We had 60,000 new cases in the United States reported yesterday, but keep in mind that you have delayed reporting over a long weekend, so it's probably a couple of days put together in there. So maybe it's not quite as dire as it appears. But basically, unfortunately, the positive test counts are getting pretty high. I think in Texas it was 16.6% of tests came back positive. Also, 400 people a day are being added to Texas hospitals, and across the country, net hospitalizations are now at 1,000 per day. So net hospitalizations is the people admitted minus the people that are discharged. So we are in a bit of an upswing, unfortunately. Adding to that bad news a little bit, there was a study out of England that said that there is quite a bit of evidence that even if you survive COVID-19, you can have long-lasting severe neurological complications. It was a study by University College in London. All right, domestically, good news, bad news. So what is it? It's Thursday. It's obviously
Initial jobless
employment
claims.
data.
Yep.
Yeah. So what did you make of it? It was better than the estimates, but it's still high. What's your take on it?
Right. I mean, it's a step in the right direction, at least, directionally. But I mean, it's going to stay high for quite some time, though, as well. So we're not going to just, turn it on and get back to where we were prior to this COVID outbreak. So I think overall, I think just like with a lot of the economic data we're seeing, it seems to be an improvement. But like I said, we're still a long ways away from where we were just a few months ago. So we'll take any shoots of green news we can get, though.
Yeah, now you probably saw the market took a bit of a swoon right where we were in the middle of trader talk, and that was due to the Supreme Court ruling that President Trump does have to turn over financial records to the Southern District of New York uh, in the grand jury there. So that was considered negative, although it was a split decision because they do not have to turn over those records, though, apparently to Congress. But it was 7-2 uh, on that. So that is the news of the day. I'm going to turn over to you, my friend, for some futures here.
Sure. Let's look at the gold market to start here, GCQ20.
All right, let me get that up for you.
Sure. And really want to start with gold today is because really we made a new high for the move yesterday. So that was, for those gold bulls there, that was actually, quite a supportive move. Unfortunately, though, it's kind of interesting. We kind of came down in gold, kind of tied with the reaction to the equity markets here as well, too. So, that quote unquote gold as that safe haven against lower equity prices definitely was not holding recently. So yeah, gold also took it on the chin as the equity markets did. But I mean, overall though, you got to say though that the market is fairly supportive, and Lee has that trend line drawn in there from the June 5th lows. And actually, if we really took it even lower, you could have probably drawn that trend line all the way back down to the major lows made back in March as well too. So overall, this market is still in an uptrend. And so the question is now, where can the gold market potentially go? Well, one thing we could look at is look at that range that the market has been in for the past several months. Was it about 1680 on the downside to, was that
1788,
1790?
80.
So we're talking
Yeah.
about $120. So if we take the breakout from, let's say, 1780 and add $120 to it, we're talking about almost 1900, so near the all-time highs here. So that's probably the upside target that we're looking at for the gold market in this move. On the
Now,
downside, yes.
no, I was just saying you should pat yourself on the back because last week you said you were bullish gold. So I'm just giving you credit.
Oh, well, yeah, it's not often that happens. So I thank you though, Lee. So now on the downside, what we're looking at, well, if you look at the 10-day moving average, which we don't have on there, but if you have the 10-day on, Lee, if you could do that.
Yeah, sure. Let me do that for you.
Sure. We'll take a look here because that's been kind of where the market has kind of found a bit of support lately. In fact, every time we've tested it, as you see by some of the shadows that we'll see here in a moment there, that we have found buying interest below that 10-day moving average. So
Yep.
yeah, we'll take a look
Where
here.
is it?
It's
There it is.
probably, yeah,
I
there
did
it is.
I got to make it a little bit. Let me make
Yeah,
it a
it's
little
changed
bit
the
thicker.
style, make it maybe 2 or 3 pixels. That'll work.
Yeah, there we go. There we go, right here.
Yeah, yeah, it's been the shadow. So we've been finding buying below that 10-day average. So right now, the 10-day moving average comes in around 1793 approximately. So that would probably be the lower bounds where I would want to see the market, even if it tests that, it goes below that, I want to see it close above that 10-day moving average to definitely keep at least the near-term uptrend intact. But yeah, right now, really, I think unless we took out, let's say, 1745, which is the 50-day moving average here, this uptrend is definitely still intact here. And I think these dips are going to be are tend to be being bought, and until we take out some major support there, I think the trend is still upwards. So whether we get to 1900 quickly, probably not. It's probably going to be more of this fits and starts like we've seen this entire up move. But you got to say right now, overall, the move in gold is still supportive. Let's talk about gold. Let's look at silver as well. Let's look at SIU 20 next. And here, once again, the market made it today. It made actually new high for the move, but it pulled back kind of following the gold market. But so right now, it's trying to hold around that $19 level. So this is another market where, as well, too, where I think the market is still supportive, though I think silver has tended to lag and this whole uptrend, and it's probably still going to be the case. We're around, I think, 94-1 gold to silver ratio last time I looked, and it's still on the upper end of historic ranges. But I think as gold goes, I think silver is probably going to follow, but like I said, still probably on a lagging basis. So the target here is, I mean, we have probably $17 on the upside. The range was reaching 17 and 19. So, if we use that as a projection on the upside, we could possibly get to $21 as a potential upside target here for silver, should this uptrend continue. Kind of similar to what we're seeing in gold, I would look at the 10-day moving average as your near-term support. So we're looking at around 1840, 1849 on the downside. So I definitely want to see the market go hold above $18 in general to keep the uptrend intact. The only kind of downside I see here for silver is that we're making a little bit of a bearish divergence in the 14-day RSI. So, that may be a little bit of a, negative pull there. But like I said, I'm bullish gold, so I'm also probably a little bit bullish on the silver market as well, though I think that it's going to continue to lag on the upside. Since we're in metals mode here, let's look at copper next. Because this market, speaking of China, has been resilient, as we've been talking about for quite some time here.
Ugh,
This market,
look at that.
Yeah, it's even today when we've seen everything kind of turn to the downside. Copper here is actually still on the upside. In fact, we're up almost 0.75%. So we do have a little shadow on top here. So the market has definitely pulled back from the highs, but I guess you kind of expect that given the reaction we had in the U.S. equity markets today. But we're definitely in overbought conditions on the RSI. However, as we know, though, in a trending market, there can stay overbought or oversold for quite some time. So, and this market, I think, is really tied to not only the strength in China, as China is the world's largest consumer of copper, but also we're seeing some concerns about supplies. We're seeing some of the mining interests down in South America, maybe having to curtail production due to COVID. And we're also seeing stocks in both Shanghai and LME warehouses start to decline. So this market definitely has some room to run, though. I think we may be a little bit overbought and a pullback probably down to the 275 area would not negate the uptrend at all. In fact, we probably get low, like probably 263 to really negate the uptrend here as well, too. But a little bit of a pullback here maybe help is shaking some of those latecomers to the market. But as far as upside targets here, 290 is the near-term target. Is that's where the highs were back in January before we had this kind of upheaval here. So I'd say that's your next upside target. And above that, we have $3 as a potential target. And Lee, if we have time for one more, I want to bring up the Bloomberg Commodity Index. That's ERU20. And if
E
you
like
could,
Edward.
E as in Edward, R as in Russell, and U as in Uncle. And if you could bring up a continuation chart,
Sure.
because this is not a heavily traded contract, I just want to kind of get a little bit better picture here. Now, this is an index made up of several commodity sectors, primarily in the energy markets. I think it's almost 30% energies, but also has a big contingent of the grain markets as well as the metals. So those are the biggest three sectors of this index. It has a little bit of softs and some of the livestock as well too, but it's pretty much energy, grains, and metals. And what I want to kind of call into the attention here is that this market has kind of, I think, kind of followed the equity markets per se, where we made the lows there back in March, and we started to drift upward kind of slowly but steadily. So I think that's kind of overall encompassing what we're seeing in the global economy in general. I think that it's saying that, we've seen the worst of the shutdowns is probably behind us, and we're seeing maybe a slow, steady climb out, kind of like we're seeing with some of the economic data as well too. So definitely kind of just, even if you don't trade this, is kind of keeping an eye to see how the overall commodity sectors are doing. We're well below where we were prior to the COVID outbreaks when these ratings were closer to that 80 level. We're doing a slow, steady climb higher. Now, there are some points of note here. I would want to keep an eye on 6840. If you notice, there's a couple of kind of spikes there back in March, and that's approximately that 6840 level. So that's kind of, I think, a key upside target that I'm looking for here. If we can break through that, then I think we could fill in some of those gaps that we've seen, especially that March 6th gap, we're just seeing as a huge gap in a lot of the commodity markets when things really start to tail downward there as well too. And that comes in right around that level, which comes in at about 72.90 as a major upside target in this. So I would just keep an eye on this Bloomberg Commodity. I like this better than let's say the GSCI, because it's not as heavily weighted to the energy sector as the GSCI is. But I think this kind of gives you an overall picture for how the commodity markets are faring. And I think as the commodity markets go, I think we're going to see some of the economy going as well too. So like I said, it's kind of a steady upward trend. So as long as we don't take out about 65 on the downside, and I think I'm fairly optimistic for a lot of the equity markets and the commodity markets in general. So Lee, let's turn it back to you.
Yeah, so I got a question for you.
Sure.
If you didn't want to trade that, is this a pretty good proxy for an ETF to DBC?
It is a pretty good proxy for DBC, correct? I would say
All
that's
right,
probably the
and
closest you're going to find for that.
Okay. And what I did want, as you said, I do want to pull up, since we are looking at the DBC here.
Sure.
Where is it here? I do have this chart just showing equity versus commodities. And I think to your point, we take a look at this as the ratio of the S&P 500, it is out of whack. So maybe, that does say that you might get a little upward pressure on the DBC to kind of normalize this just a little bit. Although it's been going up pretty steadily with the run up in the equity markets since 2009, but this
Right.
is kind of interesting.
It is still lagging a bit, right? Because I think there's still some of that deflationary uh, aspects to the market in general here. I mean, if you look at commodity markets, I mean, it made its near term recent peak around 2011, really been in a downtrend ever
Yeah.
since. So we're just really just kind of crawling back. So I mean, it's possible this could be a fairly significant low here in commodity prices, especially when you start to see economic recovery and you start to see some sparks of inflation start to go through the markets, especially with all the fiscal stimulus and monetary stimulus that is potentially out there. So as things recover, you may actually start to see some bouts of inflation, and we might see the market actually start to trend higher. But right now, like I said, it's kind of kind of lagging here, but it's kind of going in the general direction that we're seeing the equity markets.
Excellent. So more questions for you. We have somebody wants to take a look at palladium futures.
Sure, let's look at palladium here. PAU 20. Remember when this was the hot commodity market at one time?
Yeah, it was. And
It went from hot to not. I mean, this thing went completely range bound here. But even today, though, look, I mean, this is another market here where we're actually up on the day. We had another test of the 2000 level, and we kind of pulled back here as the equity markets pulled back. So uh, I think this market's going to go as we see the economy start to turn up. We definitely keep an eye on China. If this is really true, and China's economy is starting to get ramped up a bit here as well too. I would expect that palladium could actually start to break back up to the upside. Now, I would do note though that the the major speculative players in palladium have definitely dropped off this market. They were more heavily involved when we started to see that nice uptrend several months ago, but as the market has kind of consolidated here, they just kind of totally lost interest in this market. So if this market breaks out either to the upside or downside, you may start to see some of that trend following money start to come into the palladium market. And given how it's a rather thinly traded market compared to gold and silver there, you could see some decent moves if we get the momentum trend going in either direction. So right now, it's probably too early to say which way we're going to go, but I'd say just kind of wait for the market to make a breakout and go with the momentum on it.
all right, we have a question about oil next. So let's take
Sure,
a look
let's
at
take a
that
look
one.
at crude oil here, ELQ20.
So the EIA report wasn't all that. I mean, it was like
It was a mixed picture, really.
it was right. It was a build in the crude oil, but I think the products showed some. But what are your thoughts on that?
Particularly gasoline. And
Yeah.
well, but all right, on the bull side here, we saw refinery utilization tick up again, 77.5. So it's been slowly ramping up there. We're still, like I said, 17 points below where we were last year this time. So it's not a great number, but it's well off the lows we've seen. The crude oil build was a little bit of a disappointment there, though. If you look at the data, a lot of that was imports coming in from Mexico, of all places, there, as well as they had a
Huh.
pretty good increase there and a lot more oil into the Gulf Coast region. Uh, Positive, though, we've seen also a negative there that we saw a little bit of build at Cushing, Oklahoma, over 2.2 million barrels, kind of breaking that decline we've seen there recently. And also the Strategic Petroleum Reserve showed another build as well, which has been the trend, but it was not as big as we had in prior weeks. So I would say overall kind of a neutral or maybe slightly bearish report. And crude oil is really having trouble kind of breaking above that $41 level. So you would think maybe this market is kind of ready to maybe test the downside here unless we could get that breakout pretty soon. Though we also have seen volume drop the past several weeks as the market has really become kind of range bound. And you can almost say it's almost a little bit of a triangle formation maybe forming here, or even was that a ascending triangle possibly. But I think it's another market here as well too. You wait for that breakout here and kind of play the market as well too. And until then, I think you kind of hold your powder dry here for the oil market.
Yeah, I mean, when you say the breakout, do you mean, taking out that gap at 42.14-ish? Or do you
Correct.
mean
I
yeah,
would say
okay.
that's the one I'm looking at, and that's if that happens, I think 45 is going to happen. Could happen fairly quickly if we could take through that gap. On the downside, though, I mean, support's really probably around $35. I mean, so this market probably has from here a potential $5 upside or downside once it decides which way it's going to go. So it's kind of, I think, maybe the calm before the potential minor storm here for crude oil.
All righty, well, that's great insight. Let's go and take a look at our interest rates. Let's take a look at the 10-year. So we have a question: where's some of the money going today? If it's not going in my goal, it seems to be going into the treasury market, I think.
Correct.
So rates are down here. That means they're buying some bonds. This is the 10-year. And what are you going to say? It's range bound, but it looks like it's heading more towards the bottom of the range than the top right now. The reason I say that is we just took out this low from last week on the yield. And then our bond signal, our last one was a buy and seems to be moving here. Again, if you are new to charting the markets, number one, tell your friends. But also, we use this as a trend following signal on longer term interest rates. So remember, this is the TLT, which is the bond ETF. So it goes in opposite direction of rates. But when we get the faster moving average crossing the slower one, these are the 20 and 50 exponential moving averages. My last buy was here. We had to sell, kind of broke even on this one, but now it is a couple of things here. Number one, we got the cross. Number two, we got price confirmation in that we took out the previous highs. So now it's a long signal in effect on this. Again, we don't give advice, but for what it's worth. All right, let's move on to the equity markets. Oh, we were hoping we'd get the breakout of the triangle. We got it, but we haven't done much since. Just kind of hanging in there. It's interesting though, the tail today after that news came out was right at the triangle level there and came back. Yeah, I guess you got good support basically at the bottom of the triangle and the 50-day moving average. I guess the bulls would want to say, well, at least we held the 20 in the pullback we had today, which is
Right,
the
the
orange
20
line there.
and the 10 even today too. So I mean, I'm
Yeah, I'll
almost
put
right
up
at
the
the 10
10
today.
too.
Yeah.
Yeah, right there. So, I think it's going more neutral, as we've said about for the last month. We think it's going to be neutral. When I say we, I mean I. But so in case it goes down, they can blame me and not you, Mike. But
Well, thanks.
but yeah, so it's kind of in there, just going sideways right now. But there is a few things I wanted to point out, not so much on the S&P, but what I do want to show you is this. So I'm going to put up the NASDAQ 100. I'm actually going to put up the Qs. So obviously this continues to be the leading index. Even today, it is still pushing higher.
Right.
We're still over 70 on the RSI. So I'm not too worried about that type of divergence, but this is something that I picked up. Let's take a look at the equal weighted Qs. And let's compare them to the market weighted Qs. We are at a new low with this ratio. Okay. So that does mean to a certain extent the advance is narrowing a bit. And I do have some back testing data on this. If we take a look at times, Mike, when the NASDAQ, basically, NASDAQ 100, I should say, is basically just hit a all-time high and the equal weight version hits a relative low, you'd have to say that's the situation now, right?
Right.
It has been not great for the market. It hasn't been terrible, but it certainly speaks to a little bit. We don't need to scan that. Thank you. We'll run that later. Okay, so yeah, I mean, over the next month, it was a coin flip with what is going to happen. So it is a little bit of a warning sign, but and it's not the kiss of death, but it maybe means that the uptrend in the Qs might be turning a little bit more sideways. And to see it also in a different way, let me pull up this chart for you. We're going to take a look at the number of NASDAQ 100 stocks above the 50-day moving average. Okay, so we know that we are well above the 50-day moving average on the Qs themselves. Now we're going to take a look at how many stocks within the Qs are above their 50-day moving average. And you can see why I'm a little bit worried here.
Yeah, look at that
Just a
divergence.
little. That's a pretty good divergence, actually. It's not all that subtle, which makes me think that if you have some of those big mega cap names, maybe you tighten your stops a little bit. Maybe you bleed off just a little bit. This is kind of worrying. It doesn't mean we have to go down, but I'm saying with both what I showed you on that ratio and the back testing results and this, it seems to me that we might go more into a sideways action now on the Qs. The other, I had another chart in here. This is this is also the NASDAQ 100 advanced to decline lines. For the first time since we have had this uptrend off the bottom over the last 3 or 4 days, it's the first time we've seen a divergence in this too. You can see that this is we made a high on the Qs. We did not make a high this time on that. So going with the others, it just seems to me that we're going to lose a little momentum on the upside with the Qs, which has been the big winner. But I'm going to put it back, and I just want your thoughts on either the NASDAQ or the S&P. Just show me what you want to look at, and I'll pull it up for you.
Well, what I was thinking when you're talking about that that divergence here, and you may see the NASDAQ 100 start to pull back. My question is, will that actually in turn spark the general market falling lower, or are we going to see some money actually move into the lagger, and the Russell might actually start to maybe outperform? That would be my question. Is what is the effects going to be if that occurs?
Yeah, that's good. Also, will we get finally a move into the more value-oriented stocks as opposed, and I just don't know the answer to that. That's a really good point. So are we setting up then for a sell-off or more of a rotation, right? That is the question.
Right. I think
And
that's
we
the
don't know
question.
yet. Yeah, let's take a look at the Russell and see if it's showing any, it hasn't been doing much, that's for sure.
Yeah.
Now the bulls would say, well, we tested the 50-day even in the downdrafts we had after that news come out, but we held it.
Right.
But I think you've got to, I think for your thesis, Mike, okay, I think for your thesis that if we can start trading back above that 1470 level, that might validate what you're thinking. We might get a rotation in there, but it hasn't happened yet. But I think the test of the 50-day might be a little bit instructive to what you're saying there. I don't know.
Right, it could be. It could be, maybe the low of this little bit of a consolidation or a little bit of a triangle that seems to be forming. Because let's face it, recently we made a series of higher lows and lower highs, so we're definitely kind of consolidating there as well too. So yeah, I think the 50-day is pretty critical. If the market could hold above that, then yeah, then I'd be maybe more inclined to say maybe a little bit of rotation, maybe to the Nasdaq or some of the value stocks. But if we can't hold that 50-day, then that may portend maybe even more general weakness overall for the market. So but right now we're actually at a critical point here in the RSI. You're right around that 50 level as well too. And like I said, this whole little area for the last several weeks, we've kind of tested it and always rebounded back. So let's see if that continues again today or even this
Yeah,
week.
so yeah, so we have a question about the breadth thrust indicator that we sometimes look at. It hasn't triggered for quite a while. Well, the Zweig breadth thrust, which is the classic one, was very close to a thrust, but it didn't. Here's the chart on that one. The last time it gave a true signal was back Christmas Eve of 2000 and what is it?
19.
19 or 18? Yeah, 2018 December.
Okay.
That low. What we did now, I will say the thrust off the bottom in March was very close to giving a signal. You have to know how it's calculated. It was within a hair's breadth of giving a signal. So in that sense, probably we had one. And you can see that it was why we didn't get the classic one, because you got to get to 0.65, and it was like at 0.642.
Ooh.
So it didn't quite, it was real close. But in that same vein, we did have the breadth thrusts, the volume one we did have. You can see we had a whole series of them in here coming off the bottom. So this one shows you the times it triggers when you have 9-to-1 up volume versus down volume. So we haven't had it recently, but we did have it coming off the bottom. And generally speaking, we might have a pullback in here, but pretty much every single time you have this type of breadth thrust in the longer term, I'm talking about 6 to 12 months, the market has been higher generally. So we might have some short-term weakness in here, but oh no. Let's see. We have a question on Russell. Is it a diamond pattern? Perhaps. Let's draw it in for you. So let's just take off everything. All right. It's kind of in it. It's a little bit skewed now.
Elongated, yeah.
Yeah. I mean, you like to see it more symmetrical. But I think to a point, if you break that lower trend line, you've also broken the 50-day moving average, and they just happen to line up. So that would be a key thing for the next move on the Russell if it breaks that. But yeah, you could say it's a little bit of a diamond. It's not quite as symmetrical as you'd like to see, but it's kind of in the spirit of it. BJ from New York wanted to see that. Okay, let us take a look at the sector action. So let's start, we were talking about gold. Let's take a look at the miners. Broke out. Right now, it looks like they tested and held the breakout level. These are the bigger ones. So this is still, unless we take out, what is that, 37 3/4, you'd still
Right.
have to give the weight of evidence to the bulls. The juniors are doing a little bit better. They haven't given it back as much. Although today could be a bearish engulfing candle, but all that would say is maybe you go down and test the breakout level like you did on the bigger gold miners. We had a question on lithium. We had mentioned this one had broken out rather. Still looks good. Now, a couple of things. If you're trading these, you know, your walk away should be below that 33 and 3/4. But right now, it's doing okay. And then if you want to trail a stop, just put up some fast moving averages and see which one has worked. So the 10 has worked in here, but sometimes when things really move, a lot of swing traders will use the 5. You can see it when it's really moving. Look at how it holds the 5-day moving average. So if you wanted to really tighten your stop, you could use the 5-day here on this breakout. Similarly, let's take a look at the other ones I've mentioned that have broken out. See how they're doing. We told you about solar, okay? Still holding the 5-day. Now it's basically, it didn't surprise me that we sold off just a little bit today after we tested that previous high. I mean, that usually happens, right?
Right.
The
If you
first
got
time
a
to test, but it's not negative. It's just people took a little profits there. Lithium is used in industry. Yeah, it's used in a lot of things that have those batteries. It's pretty well used. I don't. You know anything more about the industrial use of lithium? I just know it's in a lot of electronic batteries and things.
yeah, that's the only usage I'm aware of. So primarily that's what you hear about. So
Yeah, let's take a look at other things that you know, the biotechs have been giving it a little bit back, but they're still pretty strong. So holding the breakout on the smaller biotechs here. A little bit more pain on the bigger ones, but still not too bad.
nope, hanging near the highs.
Yeah. So again, let's take a look at healthcare in general. Still range bound. Still range bound. And that's one of the reasons. These are the big pharma companies.
Well, that's getting tighter and tighter there, but
Yeah. I don't know. These are medical devices. If this can break out, that could pull up the XLV. But it hasn't broken yet. But we'll put this one on a watch list for a breakout. Medical devices. All right, let's just do our scan and see what else is moving today. I just wanted to follow up on the ones that we've been talking about for a while. Number one, because they're working, and we've also told you about this one.
yep, K-Web, look at that.
Told you about this. Told you about this. Continue to go. We said we'd look at the EEM and the China markets too. So let's do that. Not that it's a sector, but I'm monitoring the 5-day moving average on this breakout of that triangle. Place to take a little bit of profit might be up there at 45. So this is the EEM, and it's got a 40% weight for China in it. And then this is the China ETF.
Yeah, look, also right at your
Yeah,
target level there.
yeah, right there. That's why I've got that line in there. Now, if it can break through there, the measured move would be something. It'd be 38 to 45. What's that? 7 points.
7, yep.
That would
52.
put you up to 52, which is right about the old high. That would be your target if we can take that out. It wouldn't surprise me that we'll back and fill a little bit in here because they're right at resistance, but monitor that one for a breakout for sure. All right. See what else is going on here. Cloud computing we've been telling you about. Still holding the 5-day. Look at how it tested it today intraday. Let me zoom in there. Not bad. We gave you this one when it, again, not recommendations, just observations, but we
it broke
told you
out of
this
it.
one when it broke out, yeah, back here. Okay, and do a couple more. Let's take a look at some of the reopening stocks. So this ETF is a lot of the reopening stocks away.
Yeah,
Got
flat
some
line.
travel and flat line. Yeah, airlines. Oops. You'd have to say it was a failed breakout, and now it's just doing kind of nothing. And let's take a look at the gaming stocks. Now
Pretty
they look a
similar.
little bit better than the airlines. So you can set your risk on that one. Take a look at energy.
Definitely,
Gotta watch this one.
yeah, that one's starting to roll over here.
Yeah, it is. I don't like the look of that one. All right, then somebody wanted to see the holders too, so we can take a look at that. This is oil services. They're holding support,
Holding.
but they are under the 50-day moving average, all right?
Yes.
Anyway. All right, Mike, our time is up. It goes so fast.
It always does, Lee. Was anything there on sentiment there of note this week?
Well, yeah, well, I'll cover that. I forgot it is Cinnamon Thursday.
It is Sentiment
We have
Thursday.
all these. It is, yeah. We can do that in the last 30 seconds here.
Sure.
Smart money, dumb money is a little elevated. It's a 30% spread, but it's right on the border of being actionable. The newsletter writers, though, are pushing up towards the danger level. They're at 57.7, up 54 from up 54.5 last week. The bears dropped from 19.8 to 18.3, so it puts the bull bear difference at 39.4. Remember, 40 is where you get a little worried, so we're kind of
Getting
close.
close.
Yeah. We were at 41.5 at the end of January, just to put it into perspective. We actually got a little bit more bullish movement of Ma and Pa, we say affectionately. This is the AAII survey. The bulls went up 5 points to 27.2, but they're still well under the historical average of 38. The bears went down to 42.7, but that's still well over their historical average of 30.9. But interestingly, I will say that they have that monthly asset allocation survey. You know, this is weekly, but we saw that, I think it was last week we talked about this, Mike, that they have kept. So they are kind of pessimistic, but they didn't change anything in their portfolios. They're still at 63% exposed to equities. So they're just holding on even though they're bearish. It's kind of interesting. Alrighty, with that, we are done. Coming up next here on Schwab Live Daily, we have Schwab Senior Quantitative Analyst, Adam Lynch. We'll be talking about Schwab equity ratings. I'll be back tomorrow on Trader Talk. And Mike, you're back on Monday.
On Monday at 12 p.m. Eastern, I'll be on with Jeff Gilbert, who's the CEO of KKM Financial and frequent CNBC contributor. So definitely stay tuned here. Jeff's take on the futures markets on Monday.
And one other programming note, I will also be on Monday